The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, you get the Dow Industrials up 49, Nasdaq's up 10, S&Ps are up 3.5. Gold is down 240, trading at 11.05. We have silver down 4 cents, 14.31. Platinum is up $4 at 9.58. Bonds, the 10 is off 8 ticks, 127.09. 30 is down a full point and 5 ticks, 153.23. And you get good old King Dollar up 58 at the 95.47 number. Bottom line is that when you do look overseas, last night, Asia got toasted last night once again. You had the Hang Seng down 0.4%. Shanghai, however, was down 3.5 and 4.9. The same Jing market was down 4.95%. Bottom line is that Shanghai is going to be going after those lows, folks. And it looks to me that, that more than likely you're going to see those lows blow out. So 2,500 is the number. That's how it looks that baby wants to get after. And right now you're dealing with 3,005. So there's going to be more downward pressure there, which is pushing some of these small caps, large caps around in quite a large way. Inside the Dow Industrials today, the strength versus a weakness. This is what you have happening. Strength out here. You have Chevron. Chevron is up $1.25 at 77 bucks. Microsoft is up 64 cents. That was the weakness yesterday. Merck is up 60, and you have Intel up 28. Taking it down, even though it's up, Disney. Disney's down 131. Home Depot's off 60. Nike's down 36, and Coca-Cola is down 12. Inside the NDX 100, strength versus the weakness. You have Marriott is down $2. That's taking it south. Vodafone is down 70 cents. Trip Advisor is down 117, and Netflix is down 140. We'll get back to Netflix because Netflix is now making its way into the lower part of the trading from August 24th. Bringing the NDX 100 higher. You get JD.com up 45 cents. SanDisk is up 87, and LLTC, Linear Tech, is up 58 cents. The bond market, if we go take a look at the, let's go to the TLT. So everyone has the TLT. This is the 20-year plus ETF structure. Okay, so when we take a look at this, what you're going to see is that you have a high volume swing point on the 24th. And, basically high volume swings want to get tested. So right off the bat, it's like, okay, man, you're going to go back up to the 24th, which is 128.92. The bottom of that's 125, top's 128. We're trading at 120. Now, how are you pulling back? Well, you're pulling back with dramatically lighter volume. I mean, it's pretty intense, actually. When we pull back from the 24th, we're pulling back like with 7.4 million shares, which is going into 16 million, which is going into 14 million. That is saying we're going to go topside again. So this bond market continues to scream that it wants higher price. Now that's on the daily. We flip this around. We put this on the weekly. Let's see what we come up with on the weekly. On the weekly, it's even more intense because on the weekly what you have is this. The weekly, when we went up on the 24th, the week of the 24th, we went up with 67 million shares. Now, that's 67 million, folks, okay, was coming into when we came off the highs in January rather. First we came down, the first leg was in January, second leg was in April. When we came down, so watch this, the month of May, the week of May 1st rather, we came down on 48 million. The following week, 61 million. And then we go back topside into that week with 67. That's what you're looking for when you're taking out supply lines. We came up with 20 million more than on the way down, when in fact on the way down had some force behind the move. That is an indication that bonds are going to go to higher price. The wild card out here, there's no two ways about it, are going to be that you know, with the Fed going or not going, I mean, it's all a perception deal that we have out here. There's no doubt. Because every time I flip my head around and say, okay, the market, the bond market in the dollar is saying that the Fed is not going to move. So if the Fed doesn't move, it would make sense that, okay, more QE, the S&P should go up. Well, the S&P is saying it wants to go down also. So it's going to be Thursday at 2 o'clock. There's going to be action. There's the action is in there. What we did have at the open here this morning is the same type of MO that we had on the open yesterday. So with that, what I expect there, and what I mean specifically by that, is that right off the bat you had a seller in the marketplace. If you take a look at this 10-minute one, you're going to see how this shakes out. The market itself, you know, pops up. You had the E-minis up to right at 9 o'clock. They were at 1952. Right at 9:30, bang. What do they hit them with? They hit them with 57,000 contracts. You know, that was the exact same MO as yesterday. So I expect what you're going to see is they're going to see a trading range out there today. But, you know, for people, if you buy folks that are trading, it's awesome. I mean, because the range is probably going to go from 1939 up to this 1950. That's plenty of bread to make plenty of money in between that whole spread. That's, you know, so you get 9, 10, 11-point spreads in the S&Ps, guess what? And you're bouncing off those levels. Nice little trading deal. No two in, because what ends up happening is that, like right now, we're trying to get into that bar again, and on the 10-minute basis, it's not even close. You know, you're 4 minutes into that bar. Okay, so picture. The first bar coming down was 57,000 shares, contracts. Second bar was 40,000. That was both down. At 40,000, that's what rejected the 1943. Now it goes topside with 31,000. That was the 10-minute time frame from 9:50 to 10, from 10 to 10, from 10 o'clock to 10 past 10, 19,000. So watch, 19,000, 31. This one's even getting less. That thing's going to stop there, and then it's going to go attack the other side once again of that 43, and right now we're at 47. You take a look at the NQs. I suspect they're going to be set up the exact same way. NQs right now are at 43.10. Which have with those babies, same type of setup. You know, we had made that high at 9 o'clock, 43.16. First sell down, right there, 9,900 contracts. You're testing the tops of those with lighter. So that baby's set up at 92 on the way down, and you know, 43.16 higher, which isn't bad. I'd like to see the NQs open up a little bit more, meaning doesn't matter which way, go higher or lower. So we set up that that zone in between that. We go take a look at the dollar index. So DXZ5. Okay, dollar out here. So yesterday, sideways move, couldn't handle price. Same type of setup right now. We're at 95.45, and 95.27 brings you into the 24th. So the closer it gets to that level, the more probability is that it's going to get to dramatically lower price. Netflix. Netflix continues lower. Not that bad today, but guess what? Once you're sucked into that bar, which Netflix is, the bottom of that bar, so the 24th, Netflix traded from 109 to 85. After the 24th, it bounced all the way up to 119. Gave it up in spades, came down with some more juice into the 93.55 area. That's what it's pushing into right now, and it looks like it's not going to be able to handle price. The volume is contracting, but it's having a hard time handling price. That is setting up, that wants to test the 85.50 once again, and that's a huge problem, period, for the NDX 100. If we go take a look at Apple, you know, Apple was the mover in the NDX 100 yesterday, as well as the Dow Industrials. Apple kept the market, well, it was down slightly, but kept it basically up, even though it was down. Apple right now is going sideways, down 14 cents, no big deal. Apple is having a hard time getting into the downdraft that had been created out here the past August. Apple was going into 124 million yesterday and only did 58 million. So that's a big number. What Apple did do when they were coming out in the afternoon, they were coming out talking about their iPhones and the numbers of iPhones that we're going to do. But what they wouldn't do is actually give out the numbers. They, the last time that they did this upgrade, they actually gave out the numbers, the pre-order numbers. Yesterday, I suspect that the pre-order numbers are smaller, and they, bottom line, they wouldn't give them out. So we'll see where that whole thing does shake out. They did say they're going to sell over 10 million of them. What they also said, though, is that last year they didn't do the first weekend in China. That is on game right now. The first weekend is going to be in China. So, the numbers are not actually going to be the same. Some of the high volume stocks in this market that we have right now, you have Yahoo. Yahoo got smoked yesterday. Yahoo is a problem also. Yahoo's flat out there. You get GE up 14 cents. You got Microsoft up 74. Ford Motors up 18. You got Twitter up 50. PayPal is down 41. Some of the Dow stocks. We have Disney down $1.41. Oxy's up 41. Big Blue's up 25. You get Walmart down 20. Walmart continues to have big problems. This is Tom O'Brien. This is TFNN. Stay right there, folks. Come right back. Dow Industrials are up 63. Nasdaq's up 16. S&Ps are up 5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials are up 87. You get the NASDAQ up 24. S&Ps are up 8.5. And there was a question in the den, the aspect of the Asian markets versus our markets. And, you know, bottom line is that why are we not in step? And it's a great question. And, you know, it's one of those deals that we're not in step until we are in step. What does happen is this. There's sometimes 2 days, 4 days, 5 days. Bottom line is that one market does affect all markets. Now, what I was watching out here, so watch this. This gets interesting. And this is where my head was going this morning. And one of the main things, folks, is that when I bring up the Dow and the NASDAQ, the strength versus the weakness, watch. I'm going to bring up the NASDAQ again for a second. This is what stuck out to me this morning. It's like, okay, the leader on the way down is Marriott International. And I was looking at Marriott before to go short the stock. And so Marriott is down 161, $71.38. And that thing's coming down with some force this morning. You know, it's already, last 6 months, went from $84 down to 64. Just did a counter trend bounce up to 73, and it's coming down. And as soon as I saw that, I says, okay, hold it. That, you know, I brought up the any type of news on it just quickly, right when we were on. And I'm looking, I'm saying to myself, and what I was looking there for, folks, was, okay, is this China? Is this Europe? What is this? Because Marriott has a great business plan, and this business plan, you know, they don't own hotels, folks, okay? The bottom line is that this is a royalty business. They did $13.8 billion last year. They plan on doing $14.7 billion this year, and you're talking about revenue. Most of the revenue is in the United States. It's like, okay, so what is pushing this baby down? You know, their growth is Europe and Asia, though. You know, North America right now, they do $8 billion. Internationally, they do 2.3, but they planned on growing by 20% in the next 3 years. Where in the United States, they only North America just 7.9%. So when I actually looked at that, I says, okay, well, that, you know, there's China is written all over that. Europe is written all over that. If we go back to the China markets for a second, they're not by themselves. That's the bottom line. My take is that this thing will hit. You know, what has happened is that, you know, China actually went up dramatically, and we followed that, but it took 3, 4, 5 months for us to follow it, and then China actually had fallen apart. China started falling apart last July. Oh, no, this July, actually, July 15th. Yeah, July 2015. So that's where so it took us a couple months to do the first leg down after China had already done the first leg down. But I expect China's going to go after this 2850, it's going to go after 2500, and that is going to, bottom line, affect where our markets are going. It's going to affect where our markets are going because of the fact that there are so many funds in all these markets. They're in all the markets. So picture this for a second. years ago, depending on how long you've been in the marketplace, what used to happen is this. If we're talking, the 90s, what would end up happening is that if one sector started making money or losing money in the United States, people would pile into that sector, whale that sector all the way up. Once it starts losing money, whale it all the way back down. Now what you have is that, and particularly if you were in a sector and that sector was getting hit, losing money, what you'd immediately do is you'd go to wherever you're making money, you get rid of that sector and you're swapping those off. And it's a lot easier swapping those off if, in fact, you have some winners and you're just dumping the losers and getting the winners. Well, what has happened now is that we're doing that all across the world now. So that is one of the aspects of why these world markets actually affect each other, because it has to do with the effect that you get large money managers, they're either making money or losing money in a certain market, and what happens in order to smooth their results out, if let's say they're selling losers, they're going to sell some winners simultaneously, smooth it out, get rid of some of the pain, so it's going to be wild watching this whole thing shake out. What's going to be particularly wild is that if they do go up a quarter of a point, what is going to be the reaction to the marketplace? Either way, whether they go up or don't go up, it's going to be like, and it's going to be really wild if nothing happens. Because we've had a few of those. When you think back to last year, we were supposed to go up before, nothing happened, the market flattened out, it didn't do anything. I don't think that's going to be the case this time. I think we are going to get a reaction. But Dow Industrials are up 81, Nasdaq's up 22, S&Ps are up 7. You stay right there, folks. We're coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials are up 120. You get the NASDAQ up 31. S&Ps are up 12. And as you come over to our website at TFNN, folks, you're going to see right under breaking news. If you happen to, trade the commodity markets, looking for trades inside the ETF structures in the commodity markets, well, you're going to see under breaking news the seasonal price patterns and con. That's the president of Tecreum Funds. He wrote this piece, Sal Ghiberti. Nice piece. Check it out right on the front page of TFNN. He'll walk you through. It's a 3-page. It's a 2-page article. The third page is it's a 2-page article. So check it out right in the front page of TFNN. Let's go over and we take a look at where we stand right now. You get the expansion up here, ESZ. Since we've been on, you get a couple pushes with juice in this marketplace. Let's see if we have a push with price. We'll see where they get the push with juice right now. The S&Ps right now are up 10.5, and ESC. We are going into. Let's pull this up. There she is. Okay, so if the first expansion, your first downdraft, as I was saying a little bit earlier, first downdraft still had the juice in it. That was 57,000 contracts. You're coming into last 10 minute was 29,000 contracts. Right now we're dealing with we're over with 29,000. With 35,000 right now, so she's going to have some juice. She's going to have some juice on this baby. She's coming right into where the market gave it up yesterday, which would be the 1959 area. You're at 1955 at this particular point. So we'll see how that baby shakes out. If you take a look at the SPY, the SPY, what you have with the SPY is over the highs of yesterday. We're at $1.24, and let me pull this back just a bit right there. Okay, so right now, 197.22 is the number. 4 million shares. It hasn't done the volume, so this is going to be this is a pretty good test right here. The 197.22 is a good test. This thing can run up to that 197.31 pretty quickly, though. There it is. And what that is, by the way, folks, that's the lows of how we came down. So it's right where it is. Let me go pull up the NQs right now. Take a look at the QQQ. That's at 106.02. We look at this. That is actually over that area. 105.85. Okay, so what this is testing, but this has some juice behind it. This is testing the downdraft of the 9th. That's where that is testing right now. And we're close enough that that's going to go up into the 9th and see whether it can basically get into the 106.05 to 106.31. Now check this out. This is where it's monster volume up there. On the 9th, folks, what we had done is this. We had opened at the high, 106.31, and just traded down all day long. That characteristic there is big numbers. You're talking 3.1 and 2.9 on the 10-minute basis. So the market has work to do up here, that's for sure. I suspect, as I said a little bit earlier, it's going to be, this would be really sweet if this is going to be the range, meaning we actually are going to be in a trading range. Intraday, I'm talking about, intraday. We get over, well, and this is where we're going to get a decent clue if we go over to the bond market, because when you get an expansion on the S&P, the bottom line is that you should get a downdraft in the bonds, and it should have some juice behind it. And, you know, we did get that. The 10-year, it's contracting somewhat, the volume, but you did get the spike down. We just got the spike down. Someone just pushed 29,000 contracts out. We go to the 30-year, and I suspect we're going to see the same thing. This is interesting. Okay, so check this out. You didn't get the expansion of volume on the 30-year. You got the price, but you didn't get the expansion. So that's saying that the 30-year is going to try to hold 153.18. Right now we're at 153.20. King dollar, we get over to King dollar. King dollar went from 75 up to $1.30, and inside King dollar, you get a slight expansion of volume. Let's get over and we take a look at the oil markets out here. Right now, the oil market's up 50 cents. It's trading at 44.93 CLX5. Okay, so right now you have, oil doesn't want to go anywhere. Interesting. So we're on the X contract right now, which is the November contract. We're at 44.92. You have 53,000 contracts, and that's not even close. That's anemic volume inside the oil market. So that's saying that oil isn't going to make and stay at higher prices right now. Gold is down 350. Let's see what they did with the gold contract. They moved that around $1. They haven't been moving that too much. That continues to have no sellers. We don't have buyers, but guess what? We don't have the sellers either. So what we absolutely do need is buyers inside that contract. We go over to the the futures market, commodity market. Lean hogs are the number out there today. Lean hogs are up 3%. You'll get crude up 1%. Soybeans are up 0.8. Copper's up 0.7. Gasoline is up 0.5. That got killed yesterday. Downtown, you have coffee down 1.8%. Wheat's off 1.3%. You got orange juice 0.8. Corn is down 0.5%, and gold is down 0.3%. We take a look at the ExxonMobil and the Chevrons of the world. Exxon's up 49 cents, 2.9 million. It's going at the 17 on the way down. So that's another indication that they're not ready to buy yet, and they want lower price. Chevron is up $1.50. 3 million shares. Excuse me, folks. That's going into 11. So that's not that bad. But it needs a lot more than that. It needs like 23 in order to get up into and hold those higher prices. 877-927-6648. We go over to the XAU, the HUI. This is what you have with the XAU. The XAU is up 78 cents. You're trading out at $45.45. The XAU just come back inside the, let's see, the 5th of August. And it has to get inside there and stay inside there to stay inside that range. So it just did tuck its head inside the larger range. We go take a look at the HUI. The HUI is trading up $1.24 at 106.46. That also is inside the larger range once again. And that's crucial, by the way, folks, okay? Because those ranges, you drop out of those ranges, and then you can trade in the next range for a long period of time. In this case, gold, XAU, HUI was dropping out of a low range as it was, coming into a lower range. It rejected that price. Now it's going into a higher range. We're going to take a look at good old Walmart. Walmart continues to say not only that it wants lower price, but for the market in general, Walmart is set up that, you know, this market wants lower price because Walmart is also having a hard time getting out of the trading range from the 24th. Walmart's at 64.34. The top of the range for Walmart that day was 66. The bottom is 61.50. You know, you start laying those babies out like that, it's a big problem. GPRO, GoPro is a wreck. This stock is really a mess, and it's like wondering, like, what is the real problem with this stock? Because their sales look fine. The chart looks like it's actually going to break not only down, okay, the lows on this is $28.65, but the way it's coming into that area, it looks like it's going to go a lot lower. And, you know, when you take a look at what they pushed out the first shares at $24, but of course no one got them because it opened up at $35. The second dairy that they did in November, they pushed out $75. So you're talking about some very large losses for huge amounts of folks inside GoPro. We go take a look at the XLE in general, the whole energy sector. Also light volume, going into heavy volume, not ready to go. The financials, and the financials are going to be good to look at because of the aspect of if the Fed does go up a quarter point, what that does, that's going to help the financials tremendously. Why? Because the spread price will go up. Because none of us are going to get, you know, less expensive money. The bottom line is that even though it's a bank-to-bank deal, bottom line is that banks will end up making more money. But banks right now, the way that this is trading, is saying this is not going to hold also, because we're doing 5 million shares. 5 million is going into, like, oh my God, it's going into 116 million, it's going to 78 million, it's going into 35 million. Bottom line is that the financials also going to need a lot more behind it. Dow, they're putting juice into this Dow, though. The Dow number they're getting up there, it's $1.51 right now. So that's a decent number. The players, there's only one stock that is negative right now inside the Dow. Disney. Disney's down 94. The top stock is Merck. That's up $1.11. And every one of them are positive right now. We go take a look at the NDX again. And the NDX is still, well, it's up 39 points. But bottom line is that if you want to see the leader inside the NDX right now is Staples. And Staples, folks, okay, is a dog extraordinaire. It's always intriguing to see what is what. But, you know, Staples has gone from, what, $28 down to $10.80. Does a counter trend bounce now, is lying out there at $14. They got some juice in here. They got some juice, baby. So the S&P is right now up 1650. ESZ. ESC 5. The rise before the fall. Okay, so let's take a look at it. So you're up $16. The high that was generated the 13th was 64, 19, and we're at 1960 right now. So that means it's going to go after it. You know, it has it to go after it. We take a look at this, and there's juice behind this move. So this will be a 100% move or move also, which is kind of neat, meaning even intraday. So when I took this B out. See, the extension is too much actually right now. So watch how this works. This gets interesting. when you take a look at this, it's like, okay, if I take the bottom, the bottom is 35, 45, 55. That's 18. And then 8, 43, 53, 63. Yeah, the extension's not too much. It wouldn't be a 1.1618, but it's quite an extension. But it looks that we'll see where this baby can it handle it, cannot handle it. Now, this is where the volume comes back in the deal. Yesterday, what happened is that we had gone down with light volume. That's what this bounce is. Now what's happening, you're at 174 million on the NYSE, which is not enough. On the NASDAQ, you're at 420, which is not bad. The NASDAQ is not bad. S&Ps, though, dramatically different. The comparison is going to be to the 9th, because the 9th was where we opened higher, went down. There's no way it's going to hit that. The 9th, we did 1.9 billion on the NYSE, and on the NASDAQ, and on the 9th on the NYSE, we did 928 million. So just don't see it. Dow Industrials right now are up 147. You get the NASDAQ up 38. S&Ps are down, up 16. You have you have all the Dow stocks positive, except for Disney. Honeywell, Boeing is up at 234. Look at Boeing. Let me see what's happening with Boeing up here. So you get Boeing up $2.35. You're going after the high of the 9th, 4.7 million. Now that could get the 4 million. We'll see whether you get an hour and a half into it and get the 4 million. It's coming right into the gap. The gap in Boeing is 136.90. That's what you're going into, and we'll see how it does handle that gap. Let's go look at Disney for a second, because it's pretty wild that Disney still is having a problem with price when the rest of these can go. Yeah, Disney, there's no buyers in Disney. This is Tom O'Brien, this is TFNN. Dow Industrials right now up $1.44. You get the NASDAQ up 38. S&Ps are up 14. Stay right there, folks. Come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow Industrials up 152, the Nasdaq up 45, S&Ps are up 14.5. And don't forget, folks, at TFNN, we do live programming 8 o'clock in the morning to 6 in the evening. You can get all of that. Sorry, folks, excuse me. All of that right in your cell phone at tfnn.mobi. Now, as you come over to our website at TFNN, you're going to see right on the top of the carousel, Gold Report 700 issue, save 20% as long as you subscribe. What's happening, it's hard to believe how time goes, folks. This week, I come out with the 699th edition of the Gold Report. You can get that today. It comes out this afternoon, approximately 2:30. Bottom line is that for this week only, you want to subscribe to the Gold Report. You want to save 20% off on a monthly basis. Check it out on the front page of TFNN. And needless to say, 13 and a half years have gone quick. I mean, real quick. And of course, don't forget, you stay right there because today we got Basil Chapman coming up, Steve Rhodes. Kevin Hinks is going to be doing the option hour. That's at noon. Then Steve Rhodes, then Dave White. I'll be back this afternoon. Our man Andy Hecht will be on the Technomental Commodity Hour from 5 to 6 o'clock tonight. We go over and we take a look at these markets. There's no doubt they got the, so percentage-wise, this is where we stand right now inside, there she is, inside the markets. Looks like the juice is, okay, we have the Dow Industrials up 0.9%, S&Ps are up 0.6, NASDAQ is up 0.8. We take a look at the characteristics inside the SPYs, the diamonds, and this is what you have. Thus far, the SPYs, we've done 26 million shares. You're going into 149 million. So we're an hour and a half, 626. It's going to need more volume, but bottom line, it's it's going to need a lot more volume. The Qs, we take a look at the Qs. What you have with the Qs? The Qs, we've done 9 million shares. That 9 million is coming into 47 million. We'll see whether we can get an expansion. They're going to need an expansion. In order to hold this price, they're going to need an expansion. The IWM, we take a look at the IWM. IWM has done 7.8 million. That baby is coming into 40 million. And the diamonds, But diamonds, oh man, this is really cool. So the diamonds are really anemic when the Dow basically is printing some decent numbers. So, no, it's not really. Well, the diamonds are at 1.7. That's really not that bad, actually, because they only need about 8 million shares. They're coming into 15 million and a disaster of 35. But the first benchmark you're going to be looking at out here, folks, is how we came into the 9th. Because if you remember, the 9th, we opened higher and just sold down all day long. So that's your benchmark when you're looking at any of these ETF structures. That would be the first place that, number one, the price is going to try to get into. It's into right now, but can it hold? And hour and a half, that's 3, 27, 50, 60. Yeah, right now the spies are saying they're going to be shot by about 30% coming into that whole area. So, you know, we'll see where this shakes out as we come into the close. What we don't have is, when you look, and this is pretty cool, if you look at the DAX in Germany, if you look at the FTSE in London, they're up, okay, but they don't have the juice that our markets just got. So there is divergence out there in a huge way, meaning that Asia came down 3.5% to 4.5% last night. You have the European market still only up 0.8% to 1%. This is Tom O'Brien. This is TFNN. You stay right there, man. Mr. Basil Chapman's coming up next. Then Kevin Hinks, Steve, Dave White, myself, and Andy. Have a great one. Have a safe one. Look forward to speaking right back here this afternoon, folks. Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.